Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So Dow bounced about 100 points or so. NASDAQ was weak. And at this point, I think everyone still needs to be neutral. Neutral and maybe neutral to positive if you have a very long-term time horizon, maybe neutral to negative if it's very, very short-term. So it all depends on who you are. As far as me, I'm a momentum trader and I like to stick with trends. And when I see something like yesterday take place, that's when I clean up, I get back to square one, and then I want to figure out the action moving forward. So after today's action, the market didn't tell us much except for we didn't come roaring back. The high growth tech stocks that we love to play were actually weak. Oil is still high, and we're still we took back not even a third of what we were down yesterday. So I still think that yesterday does have some importance. So if you take a quick look at the chart of the S&P, you'll see, here's the move that started obviously back in October. Each step of the way, the markets behaved very, very well. Starting here, when you had a 25% pullback, almost nothing. Then we peaked out again, same type of scenario. And then we extended into our target area. And then at that point, you had those two distribution days where for the first time we held the 38.2% retracement, and we talked about the speed changing. And then, after these two big down days, these 2 days that came afterwards pretty much negated some of that power and put you back to maybe neutral, positive versus just neutral. And then we continued, started to look like we were going to go again, and then pow. So if you look at today's action, you'll see that we took back a bit of it. We didn't close on the highs. We closed around 1238. I talked about 1240, 1245 as resistance. And then, in order for the bulls to take off some pressure, we would have to close above about this 1250 area, which we're below. So if you want to compartmentalize this range, you could say the longer we stay below 1250 to 1255 without closing above it, the more that day has relevance. And if we hover below it and we start to see some more weakness in some of the names we trade, perhaps we do trade below this lower level, and then we see a bigger retracement or maybe even a bit more of a correction. So take a quick look here. You'll see again, right now you have a double. We could trade against this area, which is about 1226. Then you have that 1215. Okay, this is really important now. And then you have the 50 that's been moving up, and this was really the line in the sand that I've talked about many times on television. As far as, again, if you're a macro holder and you stayed the course, during this entire period, and then even on this outside day, don't switch around. If you're a momentum / trend trader, you have to switch gears because right now we're in that neutral environment. I do know that most guys made their money like I did today shorting Apple. Apple had that island top at earnings, never got into that gap, so that powerful gap remained in control. You had the market run for about 5-6 weeks and it did nothing. So we tried to give it a little bit of a leeway, saying maybe we have to absorb Steve Jobs passing away, maybe absorb just a bit of an unknown in that earnings, and basically today or yesterday told you that box should resolve to the downside, and we almost had a gift that we talked about in the morning call when it was up $2 for it to go negative, trade through the 50-day, and then went all the way down to the 100-day. So if you look here on Apple, when people are like, what's going on with Apple? What's going on with Apple? The chart really told most of the story here. Here's the island top, came in, held the 50-day, tried to come in, not enough power to get in it, came back down, and then obviously looked good again here, but then all these guys up here were trapped. We gapped down yesterday, closed in the lows, and then today it opened up $3 or so. You could have shorted it at 398. I think my virtual trading floor showed it short, pre-market, and then I added as it went negative, and then if you put the 100-day in, which is Laz style, where he likes to have a roadmap of where these things are going to go, it went to that 100-day, and now we'll have to see what's the next move here for Apple. I'm not saying the Apple story is done. I'm not saying that it's going to go to 295, but short term, which we trade short term, it just had a big move lower, so it might need to digest it. So we'll say if Apple does not get back above this area, okay, in the short term, what is this? It's like 388 to 393. The chances are we might even be able to trade it through today's low, and it could get down to the 200-day, which will be another test or another area. I think we've been drawing this uptrend, but really, if you have another one, I guess here, it comes in around 370. So at this point, if you're a long-term holder in Apple and you say, I'm staying the course, I own it from 80 bucks, fine. Just hedge yourself. Maybe sell some in the money calls. We've been talking about that anyway. You know, if you're a trader and you're trying to follow the actual price action now, it's more bearish than bullish. As far as some other high beta stocks, you look at Amazon. I think guys made some money short this. We talked about, you know, fading the up open. You know, it still looks broken to me. Never went in the earnings gap. We talked about Baidu being a little weak and hanging around, but it's not much of a trade there. The casinos actually were really weak off of the Macau news. There was a report out of Macau that I didn't actually even read it because I got stopped out of my LVS yesterday within that downdraft. But you know, it was weak quick, and a lot of guys were shorting it. And just to show you, you know, why, like if you're playing momentum stock for momentum, no, that's the case. And when momentum leaves, you leave. So if you were trading LVS that was holding this upper flag and you thought it was going to go to 52-week highs, it was going to break above this 49.50, be an unbelievable trade, you know, breakout. We love breakouts. If that was the reason you were in LVS, then that reason changed when it broke back below 47.5 or 47. So if that was your reason, you got out. That was my reason to be in this for a potential breakout, for a potential up move in the market. That's why, you know, I got out actually yesterday, not even today, just because I cleaned up a lot of stock. And so if you're in it for the longer term and you're like, okay, I've owned this thing, it's in this huge base, I'm going to stay with it. Okay, you're not in trouble yet. It's still in this base and it's still holding this short-term, you know, uptrend. It actually held there. Then you're fine. But you have to realize that that's your time horizon. Win also, you know, came in. It's not really acting well at all. I guess you could say some were pointing out that this was somewhat of a head and shoulders pattern, a little bit. It's a very sloppy one though. But I just avoid this one for now. You have the left shoulder, the head, the right shoulder. 160 to 130, that would give you a move back down to this $100 level, and that would, and if the market does get pressured, I could see this getting there. Obviously, this is your short-term support, which it held today. So if you take a quick look or a closer look here, you know, that's where it's at. Nice little reversal here. That was an outside day somewhat to get you out of some of your longs if you were in there. Tried to fill that gap. All right. So anyway. Well, you could trade it versus level for now, and then you have this pivot down here from October, but it's not showing you relative strength. This group right now is not where the momentum is. OAH is pretty strong today. Oil, pretty strong. This group has been taking over some of the relative strength that we saw in high beta tech way back when. Like today, you almost matched yesterday's bar. Okay, so that shows you that there's still a lot of interest in this group, especially considering, I guess, oil is at 97 and it might go even higher. So this OAH, you know, I think I'm going to have to start focusing on this group myself even more. You know, I know Hess was up big, XOM was up. Let's take a quick look at that chart. What does Hess look like? Now look at that. Hess actually engulfed yesterday. So that shows you relative strength. That should be a focus, you know, this stock and perhaps this group, because it's above yesterday's high, which we don't see a lot of that. And I guess it make another attempt to break this downtrend. Could be tomorrow. XOM also engulfed, right? Yesterday's down day opened up, traded pretty strong. So that's something to take note with. I'm going to take note. All right, let's see what like Schlumberger and Halliburton did on the other end of it. In stride, not quite the power of a Hess or an XOM, but still, if you want to sort of segment, you know, or what was the word that I used before? Fragmentize? It's not even a word, sorry. Anyway, it's in this upper end, you know, holding below, like, so if this is your range, here's your high end, here's your low end, it's in this upper end, so it's actually showing you some strength there. So SLB is still in that game. Halliburton, you know, also closed near the highs here, almost taking back all of yesterday. So this group is acting better. This group, I would say, needs to be more of a focus, so I'm going to try and focus in it also, because when the action's there, you have to rotate and go there. Oil, if you take a look at the USO, which doesn't really trade great at all, unbelievable move. Really crazy move. I haven't been long oil or even looked at it really, just out of the corner of my eye. You know, what I did see, though, is I see this, you know, small ascending channel that's starting to constrict a little bit. And if you look here on, you know, on where the resistance is, right around this if you were long it. And I think we spoke about it maybe once when it broke this downtrend, or I think Alex said it, right around here. And maybe take some off. And then if you're looking for a short, if it were to get below this 3670, ascending channels typically ride them until they break, and they do resolve to the downside, and that would actually be good for the market. A lot of, I guess, the bid in here also has been a lot of saber rattling with Iran and who wants to be short oil if something's going to happen with Israel and Iran. But who knows? We've been talking about that for years. But at this point, big move in oil. I guess it does have room to take that 102, but I think you should sell into this. Gold gave a nice 2-3 day short. If you guys stayed the course, congratulations. I know I went short overnight on this day, and I actually traded out of it like a little scared. I was a little scared. I don't know, because just with everything going on, I was like, I make too much money long gold. I don't feel like being cute here. And PS had a nice 3-day down move into the moving averages. So at this point, it needs a little bit of time, but it's still making a series of higher lows, low, higher low, higher low, higher low. So see how it handles this new range, how much time it needs in here before it could go again, but at least you have a new point of reference. As far as the banks, no real action there. They were weaker, they came below. Goldman tried to break through yesterday's low, but then came back above. So there was two-way action there. I think some guys made money short, some made money long. But this did resolve to the downside. I would say the longer Goldman stays now below this zone, the more pressure it can get. So watch this new area on Goldman, and it might trade in here for a little bit, but the longer it stays below this area, the more prone it is to a rollover, especially if these banks get pressured more. So all in all, I think everyone's sort of back to neutral and active trading. I know guys made money in GMCR today. You could have made money short Netflix today. You could have made money buying the dip after the spiders pulled in $1.50. A lot of tactical type of trading now. We went from trying to be multiple positions, hold through a nice uptrend, to now back to tactical, because at this point, could there be upside? Yes, but the risk of being long and carrying positions, I just don't think is worth it right now. So if that's the case, do what makes you feel comfortable. For me, there'll be some times I'm long 3 or 4 positions, based on the patterns. But right now, I'm going to be more flexible, short sometimes, long. It all depends on where we're at and what the things are staring in front of us. So hopefully you guys follow along. I think a lot of you guys had a good day today. A lot of people bounced back from yesterday. A lot of us sold those high beta names that got followed through to the downside, so you felt good about salvaging the trade yesterday. I think most guys also got out when we rallied from, we opened down 270, we went only down 200, and that was a spot when you saw the gap not getting filled, weakness set in to get out. So you saved yourself that, the future the downside into the end of the day. So all in all, you got to trade out of situations. You have to, work with what you have. And I think you guys have a lot now. You have a lot of tools and a lot of strategies, and just keep building on them, and you'll keep making progress. Scott Redler, T3 Live, the recap. See you tomorrow morning at the call. Remember, it's an 8:45 relaxed Friday call.